and you've been in the real estate business 20 plus years like I have, you've been watching the market a lot. One of the reporters, familiar faces you will get to know is Diana Olick. Diana Olick has been in the game of real estate, reporting on real estate for more than 20 years. I believe she has at least a decent handle on the market. She was involved before the crash, during the crash, and of course, still reporting on the news. Diana Olick reported some very interesting numbers yesterday about what is going on in the housing market. Basically, inventory is still down, but likely to start growing. Stuff you and I have talked about. We have talked about more inventory coming on the market. All the things that you would have heard from me. She got a question because of a statement in her data yesterday that I think she answered poorly. I think she was taken aback by the question, didn't have her ducks in the row. So I want to talk to you and Diana, maybe she will see this video someday, about what is really going on. So the quote was, I wrote it down. Where is it? Mid-size family homes showing the most stress in today's market. She was asked by the CNBC host kind of why, and Diana bounced around price and interest rates and all of that. Diana, that might have an impact on the margins, but here is what is going on. We have both demand destruction and supply destruction. I'm going to draw a picture for you, Diana, that I know you know, but we will see how the Fed broke the market. So here we go, right? As you know, Diana, we have a first-time home buyers market. You talk about it all the time. We have what's called a move-up market, which you're calling a mid-size in your latest report. And then we'll call luxury, right? More dollars, more dollars. And most people follow this path, right? You start here when you're young, 6, 7, 8 years down the line, you sell this one, you buy this one. And if you are so fortunate enough, at some point you sell this one and buy this one. However, as I've said repeatedly recently, the Fed broke housing. The Fed kept rates too low for too long. Black Knight now tells us that 33% of loans, 30-year fixed below 3%. Black Knight tells us 50% of loans are below 3.5%. So Diana, why is mid-size homes suffering the most? It is very, very, very simple. Let me get a different color. The Fed broke housing. These people that are now in their first-time home might even be sitting on $50,000, $75,000, $100,000 of equity. They even have the desire. They've had another kid. They got a new job. They're in a different part of town. But what they are doing is they are looking at their 3% mortgage, now looking at 6.5% and going, no, thank you. Diana, so next time somebody asks you why the mid-size or move-up market is showing the most stress, it's because we have stopped selling our first-time home buyer homes. So what does this mean, Diana? It means this is going to show inventory growth. Buyers here are scarce and getting less scarce because we are not following our normal trajectory. What does it mean here? It means we are going to have less and less and less and less first-time home buyer homes. Why? Because this person's not selling, thus they're not buying. This is so broken. So broken. It will be broken for years. This person who owns at 3% would normally be 2 transactions, Diana. They would normally sell, another new family would move in, and then they would take all their equity or most of their equity and buy the next home. Everybody would win. Lenders would win. Real estate agents would win. Appraisers would win. Blah, blah, blah. Diana, this is going to be the biggest problem in the market going forward. We are going to see inventory build. Diana, builders are building this stuff. They're stuck. They're screwed. They are not going to sell. This inventory, Diana, has been low for years. You have been reporting on it. It is about to get worse. If they don't sell and move up, we have a huge, huge problem. Diana, hopefully you see this someday. This is what's going on. The move up buyer is not moving. Maybe they'll move in 5, 6, 10 years, but for the next 2 to 4 years, they're done. They're not going to trade a 3% mortgage for 6.5 and see their payments double. Nobody's going to make, or very few people will make that move. So, Diana, next time somebody asks why the mid-size move-up home market shows the most stress, it's because we have canceled the buyers. The buyers have gone on strike. Buyers will go to their mortgage broker, be all excited. We want the extra bedroom. We want their newer home. And then they will get the bad news. Also, Diana, just so you know, this is going to be why ARMs are being pushed. And you and I both know what happened to adjustable rate mortgages in the crash. They were one of the huge reasons and largest reasons for the crash. As those 2 and 28s reset, it blew up the market. So not a big fan of that. So Diana, hopefully you see this someday. Folks, if you're watching this, tag Diana, put it out on Twitter. I don't know how we do it, but hopefully Diana sees this someday. Diana, if you do see it, leave a comment below. Let me know you saw it. Ask any questions you like. Folks, I will certainly be back for the daily financial news. I wanted to record this live before that just because I couldn't sleep because I needed to answer this question for her. So take care. Bye-bye.